Well, we're back with you here on the morning edition here on Market Day Report, and we're going to take a look here at what's going on in your grain trade, and we're going to bring in a little expert help to help analyze everything. Let's go right to the board and see what the grain markets are doing, because we had a bit of a push here overnight. Double-digit gains in the corn and the soybean trade based on the hot conditions, from what I understand. And here they go. July corn up 11 3/4, and now 11.5 higher at 434.5 per bushel. December corn 13.5 higher at 444 1/4, just 2 ticks off of our high of the day so far. Let's go to the soybean trade, and on July soybeans, we are 9 3/4 higher at 11.88 per bushel. Got as high as 11.98 3/4 if you look back at that overnight trade. November new crop soybeans now 13 1/4 higher at 11.76. And looking at the wheat trade in Chicago, we have July wheat there now trading 4 higher at 4.99. It got up over $5, up to 5.03 1/4. On the Kansas City wheat trade, we have July there now trading 5 higher at 473.5 per bushel. And in the Minneapolis spring wheat trade, July is 3.5 higher at 5.42. Cotton market was really on fire overnight. We had July now 32 points higher at 65.07, well off of its overnight high of 66.25. December now 25 higher at 65.32. That's 100 points off of its earlier high overnight, but we'll watch that one closely. Let's go to the phone lines. Bring in Dewey Strickler of AgWatch Market Advisors in Franklin, Kentucky, and this could be an exciting Monday here. I guess this is our first full-blown weather Monday, I guess, of the season here, Dewey.
Well, I guess that's true, Marlon. Trade, of course, has had weather, warm temperatures on their mind here for quite some time. They've been wanting a weather-type, weather-related rally, and, they're trying to get one going. But when you look at the longer-range forecast, yeah, we're going to be warm, but we got variable moisture is in the forecast as well, too.
Well, of course, this comes on the heels of a big set of USDA reports that came out last Friday, and that threw a little bit of a a bullish spin into the soybean trade. It kind of lifted it up a little bit, at least for the short term. Didn't seem to last very long, though. Now, there was some talk about maybe some freezing weather in southern Brazil. It was a bit of a concern, but from what I understand, that really didn't develop.
No, that's true. I don't think there's too much concern about freezing temps in South America here right now. Of course, soybeans have been leading the charge all along for the past several weeks, and they are just getting extremely close to a record position here. We're up near over 1 billion bushels with the funds long, but as I mentioned in the last week, you have your commercials are short 1.3 billion bushels, and when I've seen this type of extreme in the past, it generally eventually leads to a meltdown for the bulls. So, the viewers should have this in the back of their mind.
I was noticing we were just showing the soybean prices a short time ago for our viewers at home, and there is a bit of a disparity between the nearby July contract and the new crop November contract on the soybeans. Right now it's running about 12 cents or so, but it is narrowing up 4 cents just today. Do you think November will overtake the nearbys?
Well, I think eventually you're going to see the November. What I'm looking for here is to get a 2 to 3 day pullback in November beans, also in the July as well. Once we see this 2 to 3 day pullback, I think you could see one final rally up to about 1230 basis November beans, and then it's going to be over.
All right. Well, Dewey, sit tight if you would. I want to come back and talk with you about this livestock trade. Dewey Strickler with AgWatch Market Advisors in Franklin, Kentucky. We'll come back, talk a little cattle, little hogs right after these messages. Come on back. Thanks for joining us here on a Monday on Market Day Report. I'm Marlon Bowling with you. I'm joined by a very special guest, Dewey Strickler. He is with AgWatch Market Advisors in Franklin, Kentucky. I want to throw out one bit of information that just came across the wire from USDA a short time ago, just for your perspective on the grain side. 115,000 tons of grain sorghum was said to have been sold overnight to unknown destinations. And that's for the 2015 and 2016 marketing year, which ends at the end of August. So they're going to have to get that out of here in a hurry. But 115,000 tons of grain sorghum. Just wanted to pass that along. That just came across the wire. Dewey, as we look at the livestock trade here this morning, let's go ahead and pull up the futures and see what the live cattle are doing first. We have June down 257. Ouch. August down 213 at 115.22 per hundredweight. Wow, that's off of its earlier high already by $2.20. Now we have October down $1.85 at 114.95. Let's switch over to the feeders. We feared that there may be an impact from the sharply higher grain. Well, boy, we are seeing that in spades. August feeders now down 317 today at 142.38. September down 322 per hundredweight at 140.90. That's about $2.50 off of our earlier high in the early going here already, Dewey. This is looking kind of ugly here on the cattle side.
Yeah, it's not looking very good here right now for either the fat cattle or the feeders as well here. Both markets did not have very good days here Friday, and they ended lower for the session, and looks like they're picking up from where they left off on Friday. But, you know, if you look at the markets here and if you look at the fats and the feeders, we've got a little bit of a trade range going here, and I think you've got, you might say, the bulls and the bears kind of pulling at one another here. I mean, we are looking for the cattle increased supply going into July. But we are looking at a discount of the futures to cash, which is supportive. So, I mean, you got some opposing elements here that are pulling at one another.
Well, we already have the August live cattle showing a spread, or a trading range today, rather, of $3.25 just in the early going already this morning. So a very volatile trade here shaping up in the live cattle trade. Dewey, I wondered if you could explain if you ever found out what happened Friday in the cash cattle market. Because the live market was steady. The dressed market started out firmer by $3 or $4 and then drifted about $5 to $6 lower compared to a week ago at the end of the day. What happened in the middle of the day there?
Well, just kind of looks like somebody started pulling some bids. That usually, when you see a sudden drop like that, that's usually what happens. Bids get pulled. So I can't explain it any more than that.
All right, let's take a look at our lean hog trade here this morning in the early going. Is it mirroring the cattle? Well, it's faring much, much better. We have July lean hogs now down 35 cents at 85.35. They did actually get up as high as 85.90 in the early going. So they would have been slightly higher at that time, but down 35 cents from Friday's close. August is actually up a dime at 86.72. Kind of surprising to see the hogs hang in there like they are, Dewey.
Yeah, that's right. We did have a pretty ugly day last Thursday on the July contract of hogs. They had a outside day down, reversal lower here, so I think we're seeing some technical correction. Could see the market drop another buck and a half here.
All right. Well, Dewey, thanks for the comments today. As always, good to visit with you, and I'll talk to you again soon. Dewey Strickler with AgWatch Market Advisors in Franklin, Kentucky. Get out that life preserver for the cattle market today.
Rough start to the week already.
It is.
All right. Thank you, Marlon.